The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we got the market moving today. The S&P down nearly 8 points right now. We got the Russell down 2. We have the Nasdaq down 7 with the Dow down 39 points. Looking on over at our energy markets, we got oil is currently down 68 cents, while natural gas is up 1.5% on the day. We'll get over at corn. It is up 10 points, 1.5%. Soybeans flying, up 32 points on the day right now. That is a 2% move. The euro dollar is currently up 78 pips, with the pound dollar currently up, let's see, what is that, 58 pips on the day right now. And let's look at the U.S. CAD is only down 6. The U.S. franc is down 119. We got the euro yen down 84 pips. We got the pound yen down $1.07, and the U.S. yen down $1.20. Gold's currently up 20 points on the day. Silver down 0.047, which is pretty small. It's about a 0.2% move, unlike gold, which is up 1.5%. And then copper, it is a big mover today. It is down currently 2.29%. on the day. Let's check out our deviations real quick and just see where everything's sitting at the moment, and pull that on up. Just give me a second to pull that chart up for you. And where do we go? Where it is. There it is. Okay. I like to use a lot of different platforms. As you can tell, I'll have Thinkorswim up. I'll have NinjaTrader up. Just different pieces for different aspects of the market that I like to analyze. And I'll go in, and we have, of course, our deviation levels, and I'm looking at those nearly every single, I am looking at them every single day. And let's check it out. There we go. And I like to look at 10-minute bars when I'm looking at the deviations. It's very helpful. It's very accurate. It's actually how I trail my stops. And so we go ahead and pull that up. If you want to get access to these deviation levels, we actually post them inside of our website, and you can get access to them anytime you want to over at tfnn.com. Again, that's tfnn.com. Click on the Diagnostic Box Spread Analyzer right there. And what you'll see over here is, scrolling down there, and you can just click on this button. You'll be able to get right in. Get a 2-week trial. You can check out not only our deviation levels for futures, our deviation levels for Forex, our deviation levels for the Nadex markets. We also have different things built in. We have the Diagnostic Box Spread Scanner. We just added the Diagnostic binary analyzer for Nadex binaries, and we have training in there on how to trade the spreads and the binaries. And so right here you can see the deviation table. Just click here to view the current day's deviations, and you'll be able to look at them right there. So you can capture them, you can record them, you can plot them on your charts. The nice thing is we do all the math for you. It's based on implied volatility. So which is implied means expected volatility means movement. So the expected movement in the market. How far does the market expect the market to move at any given time? And once you have that expectation, that helps you for looking at potential pivot and reversal points, points where you're going to want to trail your stops when you place your trades. And one of the great things is it helps keep things in perspective. I was talking to a trader about this the other day. They talked about one of the benefits they really like, because you're on a chart and what happens? You zoom it in, and, you have it like this, all right? Or you zoomed way out. So you zoomed way out on the charts. And, so your bars are visually changing size to you. And, you have the numbers on the right side, but the bars are changing size, and that can just sort of mess you up. So, like I said, what I like to do is I like to go in by using these deviation levels. It helps me really basically always have a sense of where am I at? Like, how far has it really moved? How big is that bar really? And so that way, no matter what zoom level I'm on, I'm able to use that to my advantage. Now, looking at this, you go in, and if we have, say, a dollar franc trade on, and I'll pull up a dollar franc and show that to you, so you ought to be able to see that the DIN right now over on Tiger TV as well. And so if you're looking at the dollar franc, And, there's a lot of movement that's been happening this morning on it. And, with that, how would you trade it? What would you do to take advantage of, this massive down move? Well, if you're short in the trade, so if you get short, I started getting short signals right around midnight, and even before then, but, let's just say somewhere around midnight right over here, you get short on the market, okay? How do you use these deviations? Well, you look for a close below it. So right there, the market closes below it, and I'm able to trail my stop from where I had it, which was up here, able to move it down a little bit lower, put it right there. And then the market keeps moving, it moves down, it closes below a half deviation level. I'm able to trail my stop again. And then it closes right there below the 0.7 deviation level. I'm able to trail my stop yet again. Keeps moving, gives me room to let my profits run, closes below the 1 deviation level. And I move my stop yet again. So right there we go. And so now it's moving down, and it's really just oscillating, right? Just oscillating between the half deviation and the 1.5 deviation. But finally, right here, it closes below the 1.5 deviation. And this is what probably one of the most important things for you is to see this, okay? And this sort of lets you know if maybe you don't want to be trading that market, or if you want to be cautious on continuing to trade that market. And this is sort of the next level in learning how to use the deviations. Not only do I use them for trailing stops, but sometimes I use them to let me know, the market probably is just toasted for the day. Probably don't want to trade it anymore. And look at this right here. We go down, and perfect. Trailing stop, trailing stop, trailing stop, trailing stop, all the way down. And then look what happens. Goes back up, it hits our stop, okay? That's fine. We were able to capture a great trade. We're in here up at 97.87. We come down, we're able to get out right around 96.70 or so, and we're able to get out of that trade. So you're talking, a nice 110 pip move. But then it breaks it, and look, chop. Once it breaks that deviation level, then breaks that 10-minute trailing stop, either usually it's going to reverse or it's going to go sideways. I may throw on maybe one more trade, but again, I'm going to be really cautious on it, but I may throw on one more trade. If I get knocked out of that trade and I throw another trade on and it loses, probably just done. I may take a trade in the other direction. I'm more likely to take a trade in the other direction, but I'll take one more trade in that direction. If it knocks me out of that trade, probably not looking to keep hopping in that direction because it's probably chopping on me, and it probably is going to either go back up or just do this all day. And that's obviously worthless. You should not be trading that anymore. So I'm going to find a different market. Doesn't mean I have to be done trading since I'm done trading dollar franc. And I'll catch that up. I want to catch that up overnight and look at it when I come in the morning. Now, we go in here and we look over at euro dollar. Let's check it out because we had some fun, interesting moves on euro dollar. So euro dollar just flying on up, as you can see. So, you get some nice moves on it. And this morning got some easy long trades built in on the euro dollar. And so let me pull that up and look at it. And like I said, it's just been long pretty much all night, but especially right around 3 o'clock or so, 3, 4 o'clock, you definitely right here are ready to go long on the trade. Looking at just my trades, it's like, okay, my signals pointed in and said, hey, the overnight session, and we were just still going. But in the overnight session, you can see how this thing's just moving up and just kept moving up all throughout the day. And, we went right up to a 1 deviation level. Guess what we expect? I moved to a 1 deviation level. So, but anyway, so you go long. No, this bar hasn't closed above it. None of these bars are closed above it until here. This bar closes above the deviation. At that point, then I'll trail my stop. So now I'm going to trail my stop from what was my stop loss here on up to the bar that closes above it. Okay? So, again, I got to look all the way to find one. This one finally closes above it right there. And then now I'm looking for, another one. Closes below, closes above. So I can move it just, a little bit tighter. So if it closes below the deviation level after closing above it, and then closes above it again, see? Above, below, above. And I can trail just, a little bit. In this case, you're only talking a matter of a couple ticks. Moves on up, closes above. And right there. So we got to close above. Remember I said I'll take one more potential entry right there. We get another entry right over here. And so it's moving, and, waiting for that breakout. So we don't get a breakout there. We don't get a breakout there. Finally, we get a breakout. Okay, we have a trade. We go long right over here. Sorry, we'll get the long arrow. So we go long right there with the stop right here below the low. And then we move it on up. Close above. Well, obviously that's our stop. And now we closed above a 1 deviation. So like there's nothing that we can move except for we have what I call the X, okay? So right there when it closed above on this bar, doesn't do me a whole lot of good. So now I'm looking for something else to allow me to move my stop. What is the one thing that I talked about on the deviations where you can move your stop? If you want to, okay? You can go in, you can move your stop when it hits a deviation. So you can tighten it on up. And in this case, I mean, we're just at a deviation. We're just floating. We got in at 0.7. We went to 1. Probably going to move it like 5 ticks below the 1 deviation on this, just doing a pure style format if I'm just looking at 10-minute bars. So now if I'm looking at, a little more drilled down source, and I'm probably going to be looking more at the, the X method over here. So when I go in and it's actually broken above this 1 deviation level, and so right there, I'd actually move it 5 ticks below this bar, which would be right around 29, 40 or so, as far as where I want my stop at. So 29.40 would put me out right up here, so really at that last market spike, and I'm out on the trade. Now, what else could you use? How else could you use this? Well, we also have the divergence method, so you could always take advantage of that. So right there, and draw the deviation. Oh, let me get the other line. So right here. And, you're not going to get a whole lot out of that because you got to find the most recent peak, so which is here. And then to the bar that breaks it, which is going to be like right there. And if I draw that on there, just to let you see what I'm talking about. So here, okay. And to see if, can I find a deviation level on this right to... there, it's not really diverging on me, so I'm not able to use the divergence level as well. So I didn't really have anything to help me out except for the 1 deviation, or if you use, like I said, the the method that I use on trading, which I use at diagnostic bars instead of simply 10-minute base bars. But I do love the 10-minute base bars for the trailing stop method. That's one of 7 trailing stop triggers that I use in my trading. And so that shows us, we got euro dollar sitting right there at 1 deviation. What about pound dollar? Let's check it out. So pound dollar's had a little bit of movement today. We're went down, we moved on up. Finally closed above the deviation, closed above this deviation right here. And so with the long trade, way back here, another long trade you could have got in right over here. And trailing that stop on up, we're going to have our stop right there. And looks like we might hit it. We're at the 0.7. We almost hit 1. Almost hit 1 deviation. Definitely a 1 deviation from bottom to top. Meaning, if I go in and I measure from here to here, then, I can definitely say, that was 109 pips. What was a deviation on the pound dollar? I go here, pound dollar deviation for the day is 86 pips. So we more than exceeded a 1 deviation move from bottom to top. Anyways, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. And like I said, just go through the deviation levels, how they can help you out in your trading each and every day. So you got the pound dollar there. Let's go ahead and check out the U.S. CAD. So here on the U.S. CAD, we got to move. Nice move. Look at that. One deviation. Are we surprised? No. 70% of the time, we expect it to be within one deviation. Only 30% of the time, we expect it to exceed that. And it literally just hit its one deviation mark and just hit its stop. U.S. CAD, done for the day. All right. Let's go ahead and check out the U.S. yen. U.S. yen. Moving on down, and wow, I mean, it just screaming all the way down. And comes on down, literally closes below the 2 deviation level down here before finally pulling back up. Now it's this sort of oscillating between 2 and 1. And definitely that's a 97% range move expectation. We're going to like 99.7 if we actually make it all the way down to 3. And it was getting pretty close. So it's probably about a 99% expected move right there. So a massive, massive great move on the U.S. yen from the overnight. If we go in and look a little bit deeper, we can check out the pound yen. So on the pound yen, I mean, you can see the exact same. You're going to see that, of course, U.S. yen, pound yen, and all of them put together. And let's see, let's go in now. Let's check out our energies. So we got oil. Oil up on the charts right now. And moved on down to basically a 1.5 deviation from settlement. Ran back nearly a full deviation and a half before finally turning and reversing. So that's just a very large move. A lot of volatility in oil today. Definitely some good trades if you were taking them one after the other. And that's the hard thing in trading is you have to be willing to take one trade after another, after another, after another. And you have to trust your trading system enough to allow you to do that. You have to manage your risk well enough where you're not psychologically damaged after a loss or 2 or 3. So you can hop right back in, because a lot of times, you'll go in, you may lose one trade, lose another trade, lose yet another trade. It gets very painful, right? And you're like, what do? I can't take this much longer, and that happens if you're risking too much money. But if you're keeping your risk in check, you can make 2 or 3 potentially losing trades in a row because you keep your losses small. You keep them in check. But that only works if you let your profits run. You take on those massive profits when they do happen. That's going to be your money. That's where your money comes from trading. Now, let's go a little bit deeper. Let's check out natural gas. So natural gas definitely moving today. And we'll pull that up. Look at the volatility. I mean, it's just, oh my gosh, it's just insane. So, you can tell that the movement is actually not big for what we expect for a big move on, natural gas. But just the speed, of the movement is massive. And I'm trying to pull something up real quick over here. And of course, what caused natural gas to go crazy today? And what do you think caused it to go crazy? Natural gas inventories every day, 10:30. You can see when they happen on the chart right here. Now, what caused this? I have no idea. So something came out. I don't know. We could dig into the news. We could figure it out. But bottom line, the one thing I did know that was coming was the natural gas inventory report at 10:30. You just don't ever want to get, hammered by that. And basically, it's 89 billion cubic feet. It was 99 billion cubic feet before it actually dropped. They were lower than the expectations. They thought there would be 90 billion of the British thermal units or whatever. And there's only 89. That's not a big difference, but last week it was 99. So it actually dropped by 10 billion there. So that actually is a big deal. And the price, since the supply dropped, the price went up. Okay, well, supply, high demand, high price, whatever. Basic economics. And you can see when that report came out right there at 10:30, and then it shot right up. And a lot of people go, oh, I want to trade natural gas on Nadex. And I get it, and you know what? It's cool for trading spreads if you're trading, things like that. But they're like, oh, to strangle the natural gas news report. And I thought the same thing. I tried the same thing. And it does work occasionally. But the problem is, like anything else in the market's not stupid. So it prices in volatility. And so that movement may not be just as easy as you think it is. You might just as easily get a 30-pip move profit on a strangle on a pound dollar as you would on a 3% move on natural gas. So just keep that in mind when you're trading it. And we'll check out some of the other markets, and we'll do a news wrap as well for you. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just going through and checking out the different markets, looking at all of them. And so I'm going in, and let's look at the metals. So let's go ahead and pull up silver right now. Check it out, see what it's doing. And we did get a nice move down to 1 deviation in the overnight, late night session, but then it pulled all the way back up to settlement and then did a little swing trade bounce there off the half deviation level. And we got copper. So we'll check out our copper right now. And copper moved down a full 2 deviation move. A lot of these metals all moving last night, overnight in the session, even before Europe opened. And so made for a great Asian trading session, which is rare. But metals seem to be moving a lot, actually, in the evening hours. And then looking on over, checking out gold. Gold right here. Little nice volatility right there after the pits closed, just up and down. But really started taking it off like right around the European session. Ran all the way up perfectly to 1 deviation. Pulled back down to half, and did one more retracement right back up to the full deviation move. So gold performing perfectly in the standard norm. And we can go now, let's check out our agriculturals. So we got corn, and it's moved up. Didn't quite hit a deviation level, but it was really working on it. It did move 1 deviation, by the way, from bottom to top. So again, if you take that full deviation, and which is right around, 12.5 points. So we go bottom to top, and remember, that's one thing I'm always looking at. That's 17.25. So that is a deviation from bottom to top to bottom, whatever. And so just be aware of that you're looking at a deviation point from low to high. It's always good to know where you're at on that. And I use a ruler here in Ninja Trader to help me out with that. Hopping on in, checking out soybeans. On soybeans, You can see it's right there on the settlement. It moves all the way up to 0.5, 0.7, 1, 1.5, 2 deviations. Get a full 2 dev move on soybeans. Fantastic. Great day to trade soybeans. I mean, it doesn't get much better than that. And so, just, looking at that, and now, I mean, it's just racing back down after, this chart, you don't get a prettier chart right there. So look at that thing. I mean, just racing up all morning long and then coming all the way back down, a deviation off of that. So after all these profitable trades, you got profitable trades all the way back. And anyway, it's just fantastic. But anyway, so we got that right there on soybeans. Let's go ahead and roll it on around. Let's check out our indices. Where are the indices in all this? So after Bernanke said, I will not make a comment about whether or not I will return if the president asks me. Ooh. That makes some markets nervous because I know he's like the QE king and only to be usurped by, Japan's new finance guy over there. And then what else did they say? Oh, we might start backing off a little bit as early as June. Markets didn't like that either. So anyway, so we got the Russell. It runs all the way down a full deviation from yesterday's close, a perfect 1 deviation move, and it doesn't wait, okay? I mean, not only does it fall 1.5, that's a little retracement at the end of the day, and then just rips right on back down, right into the European session. Flat lines, basically, when the European session opens, stays flat until the U.S. opens back up, and then decides to do a run back up and fill in, what you could call the ultimate gap fill trade right there. Runs all the way up 12 points, a full deviation move, fills in the gap, and pulls off a little bit off that. Now let's go ahead and let's check out the Dow. The Dow's sort of been the strong one lately. And let's see if it's kept that amidst everything. Well, it only fell 1 deviation instead of 1.5 deviations yesterday. But today, it exasperated that move on down. It moved more than 1 deviation. It moved down to 1.5. But it also ran all the way back up and filled in the settlement. And one thing I have been noticing lately on the gaps, okay, is fading the gaps short in this market, not a good idea. I haven't really done a lot of gap trades in the last couple of months. Fading the gap short, not the best idea. Fading the gap long seems to be working rather well. And as you can see right there, great gap fill trade. Oh my gosh, what is that? If you want to go in and look at it, you're talking 100 points. So, fantastic gap fill trade right there on the Dow. And but it didn't qualify for my normal gap fill because normally I'd say don't take a gap that's more than 1 deviation. But in these markets and these conditions, who knows? Anyways, great gap fill trade. Let's check out the S&P. So on the S&P, looking at that right now, it moved on down overnight, 1.5 deviation, stayed flat, but it was a little more choppy, I guess, there in Europe. It gave a little bit of movement. And then I ran back up a deviation, could not fill the gap. So the S&P did not fill the gap today after falling down a deviation and a half, but it did do a 1 deviation retracement here during the morning hours. So right after about 10 o'clock. And we can go on, we can check out one more. We got the NASDAQ. And on the NASDAQ over here, it fell down also, like all the others, overnight. Gave a little more action for the European trading community. People take advantage of it after falling down a deviation and a half. Didn't perfectly fill in the gap, but you're talking like a few ticks, which I would go ahead and give it credit for a gap fill. So, may not have hit the settlement, but it definitely was right on the line. So we'll go ahead and give that one credit for a gap fill. I would be closing a trade if it's within a few ticks of the gap. So if I was trading that, I'm trading that gap, then I'm out of that trade. And so anyway, some nice moves, some nice great moves, some great volatility in the market. And if you're a nighttime trader, you were just loving things because, that's usually it's just dead quiet. But, you get this kind of movement, right, which is useless. What do you even do with that? But then you get this, and you're like, man, why am I trading during the morning? I should be trading right here. So it always seems like that, right? You look back, and you're like, what was the time to trade? And rarely is it that Asian session. But, man, I wish we could get Asian sessions like that every night. I know so many traders that would just love to be able to come in and take advantage of that kind of movement in the evenings that are part-time traders. And that really wraps up our major things. We'll go ahead and check out where the current broad market index is. And we got all stocks still in negative territory on the New York Stock Exchange. The negative, basically taking the all the stocks that are up for the day minus all the stocks that are down for the day, sitting at about a negative 1,000 right now, open at a negative 2,000. Market really has not had a chance to pull itself into positive territory with so many stocks being negative across the NYSE. And with that on the list, that's done. And I'll go ahead, I'll post the deviations up here for you too, so you can, like I said, check those out, be learning from those, be using those. And let's go in and let's look at what news we have while I put these up on the screen for you to be able to look at them. So right here, and pull up the deviation levels. There you go. And there's your major FX pairs and your major indices. And right here on the news, what do we have come in last night? Well, we had the Euro French Flash manufacturing report. We had a couple things come in. We're trying to see what's the big things that's worth us noting, worth us focusing on. Yeah, the FOMC, when that came out and they said the June thing, and Bernanke even hinted at it as a possibility, not as a probability, but as a possibility. Obviously, the market's not happy with that possibility. So, all right, so got those up. Let's go ahead and put the chart back on here. Let's roll through these news announcements and see how the market responded to each one of them and put together a trading plan where you can check out what to focus on. So we go over here. We go over to the euro dollar. And like I said, that was the French flash. And I really don't focus on the French flash. If I am focusing, I may focus on the German flash, manufacturing PMI. But the French came out at 3. The German came out at 330. If we go over here and we look at, the 3 o'clock right there, didn't get just a massive move on that, but I mean, it moved up a little bit. But by 3:30, that's where the real move came in, and we started seeing, we got a solid, what is that, 40 pips, I guess, or so. So I like to look for moves that are like 50 to 70 pips within, a very short period of time. And we got, an hour and a half? Got about 40 pips, maybe from high to low. We might have got 70. Let's see, 29.04. Right over here, 28.69. Yeah, so I mean, you got a decent move on that one. So I guess you could take advantage of the German flash. Just usually ignore that French flash, or if you're going to get in the French flash, get in it with the expectation that you're going to take advantage of the German flash report. Both of those reports, by the way, were better than expected. Okay, so again, they were both better than expected. Unemployment claims came out this morning at also we have the pound. Let's go look at the pound. So we need to look at that one. Actually had some trades on that one. Didn't move as much as I wanted. Right? Why didn't it? Well, because it came in at expectations. So it was sort of a boring trade. And so right over here, though, we got the pound dollar, and it came in at 0.3% at 430. So you can see that's right here. And really nothing. Just no major event. Finally, it decided to move later in the day. But was able to get out of that trade pretty close to break even if you took that one. And then we can go over and look at, say, USD yen, USD franc, whichever one you want to. And what you'll notice on that, we had the report come out at 8:30 on the unemployment claims. And unemployment claims came in at 340 on an expectation of 347. That's really means nothing. Okay, so the market did what the market expected the market to do. Therefore, the market didn't react. And so that's all you had there. We then had new home sales at 10 a.m., and that's one that I looked at. I was thinking about trading, but when I looked at all the stats, I'm like, unless it's off by like 70,000 from the expectation, there really is no significant impact in movement. So I decided to go ahead and pass on that one. Looked at the butterflies. Butterflies, all of them would have worked out fantastic. So if you took advantage of any of the butterflies, I'm starting to look at doing those pre-news on some of these, because see how the market will go flat, like leading up to a news announcement. And then let's see what else we got. We got a Draghi. He's going to have a little speech today at 3:30. Beware. Draghi is speaking at 3:30. Okay? And so he's going to deliver a speech titled The Future of Europe and the Global Economy at an event organized by Lord Mayor in London. So anyways, Draghi is going to come on and do his little thing at 3:30. So that could be a market-moving event at the end of the day. So you want to be aware of that, 3:30 Eastern Time. Okay? Then tonight at 10:55, Governor Kurade of Bank of Japan is going to be speaking. He's going to be talking about Asia's search for steps towards a stronger tie and integration, towards stronger ties and integration in Tokyo. So I'm trying to see if there's anything else, but obviously that speech could have an impact on the market a little bit. Draghi, obviously, almost any time he speaks, it's not a press conference, though. So the press conferences are the big movements. Usually the little speeches are not as big of a deal, unless they're getting grilled by like a Congress or Parliament or doing a press conference, usually it's just, it's a delivered speech, and it's usually not a big surprise to anybody of what's said. Looking on over tomorrow, what do we got? Basically nothing worth trading, but you do have the German IFO business climate report. That's not a big I mean, it's a high-impact report, but not high-impact enough to make it tradable at 4 a.m. And then we got the core durable good orders on the U.S. dollar. Again, it's a decent impact report, but not enough that I want to trade it, okay? That comes out at 8:30. But why do I want to be aware of those events? Even if I'm not going to trade them in the sense of, like, I'm not going to straddle or strangle them over, like, on the Nadex exchange, I need to be aware of them just for my own trading. If I'm trading the S&P, if that number does come in a lot different than expected, it can have a big impact on the market. I don't expect it to have a big impact, but I need to be aware it's there to tighten my stops and be ready for it. Know when the buses are coming, okay? So be very careful, and again, know when the buses are coming. I cannot stress that enough. That'll wrap up your Friday, and guess what we got coming up? We got a holiday, right? So right here in the United States, yes, we do have a holiday. It's called Memorial Day. And so obviously we want to be, it's observance of remembering those who have served our country. And so I want to go ahead and, remind you of that. And most of the exchanges will be closed, or at least for, certain hours, depending upon which ones. But a lot of forex breakers obviously will be open, but it will cause a lower liquidity. And I won't be trading that day. So there goes the liquidity right there. But anyway, so there'll be a low liquidity in the market just due to the bank holiday on Monday. And, take time off and enjoy yourself. And be aware, when there's a Monday holiday, especially like right here in the U.S., being a big financial hub, people take off on Friday, especially like at lunch, okay? They go, they come in, they trade for a few hours on Friday morning, and they're out. I'm talking about like pit traders and everything else. They're gone. They're done. And so, liquidity will a lot of times be affected the day before, sometimes the day after a holiday. And so expect lower liquidity tomorrow, especially in the afternoon hours. Expect very low liquidity on Monday. Expect lower liquidity on Tuesday. Things will kick back into gear on Wednesday. And what reports do we have? We have consumer confidence coming out like on Tuesday. Nothing big. On Thursday, we are going to start Bank of Canada is going to have their rate, or not Wednesday, but Thursday. Not Thursday, but Wednesday. Bank of Canada is going to have their rate statement. Okay, their overnight rate. So that's definitely going to be a trade in that morning that you can take advantage of. But that's really, I guess, that night there'll be a couple things on the Aussie. I'll be analyzing those to see if they're going to be worth trading. We're going to have our preliminary GDP, which is huge, on Thursday. That'll bring some volume back in. G8 meetings will kick in on Thursday as well. And we'll roll on over to Friday, where we'll have Canada's GDP number. But anyways, look for lower liquidity, if I can talk, lower liquidity coming up over the next few days. All right, be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Let's go ahead and do a wrap up. S&P moving on back down about 11 points right now. We got the Russell down 4, Nasdaq's down 15, with the Dow down 61 points. Oil is down $1, moving on down. I mean, what was it down, like 20 cents earlier? So moving on down $1 right now. We got natural gas is currently still up 1.5%. We got corn up 4 points, pulling on back there. Soybeans up 16 after that meteor move it made earlier. We got the Aussie dollar up 46 points. We got the pound dollar up 62. We had the U.S. CAD down 54 with the U.S. franc down 117. Euro yen is currently down 90 with pound yen down $1.28. U.S. yen down $1.37 and gold up 23 points. So silver right now still pretty flat on the day. Copper market's closing on down 2.5%. And so last thing, I just want to show you something that I've been using that you might want to check out with a binary scanner. It's a pretty cool trade that I like to do. And you just go over here to the box spread scanner, and then click on binary scanner. We'll have a new tab for that soon. And right on here, I'll go and I'll do these little end-of-day expiration trades. So I'll go down when there's like 30 minutes left till expiration. Okay? And it'll show me what trades are there. And then I'll say, you know what, I want trades that have $70 to $80 or maybe to $90 in value. And I just see, does anything show up? Nothing shows up? Okay, no trade. And then I'll scroll down, I'll find the next one, see if anything's showing up. Scrolling down, see if anything's showing up. I'm probably going to have to add a little more time now because we're like at 2 minutes left. So let's go, we'll go to 2 hours. But normally I'd say 30 minutes. So right there. Okay, so I'll go and I'll buy this trade. And that means the market stays up above 52.49, or right now we got one that's going to expire here in a few minutes. That's a great trade. That trade right there was a $20 trade if the Dow stays above 15,232 there. So or 15,262. So if the Dow can stay above that level, then I could actually bring in that premium collection trade. Very simple trade, very easy to do. And the scanner makes it easy to find it. Instead of like scanning through hundreds of different spreads out there, you can see the thing's already done now. But I had 7-8 point cushion on it right there, and actually about a 10-point cushion before it pulled on up. But and now it's gone. It's just, okay, it's back. Boom, can hop back in it. But got a few points cushion on there. If it stays above that price, I'm gonna bring in $15. It doesn't sound like a lot, okay? And yeah, the risk is larger. But if you can get these, especially if you get it for like $20 profit. If you had a $1,000 account, okay, and you did one trade a day where you made $20, just $20, okay, that'd be a $400 return if you could accomplish that 20 days a month. And you have a higher probability of accomplishing it if you do something like an end-of-the-day expiration like what I'm showing you, because the market can move up, can stay flat, can move down some, and you can still be profitable on the trade. And that trade right now, by the way, it's going to be profitable. The one I just showed you. Okay? So, if you can do that, $20. And I mean, now that's just 1 hour. These things are going like, expiring at 10, 11, 12, 1, 2, 3, 4, 4:15. Okay, if you just did one of them a day, at $20, that'd be a 40% return on a $1,000 investment. Now, I'm only saying one contract, okay? Now, I would not suggest you get into more one contract per $1,000 at a time. Now, you could do one contract 10 times a day if you wanted to. But, I mean, if you just did it once a day, and even at night, I mean, there's all different hours, different expirations, but you got the 3 o'clock, you got the, 7 o'clock expirations, you got the 11 o'clock expirations, you got the 3 a.m. expirations. I mean, this is the ultimate strategy. The scanner makes it very easy. We'll talk about it more on a future show. Y'all stay right there. Have a great day. We have a great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.